Okay, let's dive right into this explainer. Today, we're not just looking at the audit as some dry compliance exercise. No, we're treating it like an active investigation. We're handing you the ultimate detective's toolkit to master ACCA audit and assurance, specifically zeroing in on audit evidence and substantive procedures. Whether you're gearing up for your exam or you just really want to understand how auditors actually uncover the truth behind corporate financial statements, you are definitely in the right place.
So here's our roadmap for this investigation. We're going to cover decoding audit evidence, substantive procedures explained, action verbs that score, tackling inventory, and finally, testing receivables. Let's get to it.
Section 1. Decoding audit evidence. What exactly are our clues?
You know, every great investigator needs clues to solve a case. For us financial auditors, those clues are defined by ISA 500. But look, evidence isn't just about grabbing literally any document you can get your hands on. ISA 500 demands two very specific qualities. First up, sufficiency. That's your quantity. Like, do you have a big enough sample size to actually support your conclusion? Second, appropriateness. That's the quality. Is this info actually relevant to what we're testing, and is it reliable? I mean, you could have a literal mountain of irrelevant documents. Sure, you've got sufficient quantity, but your appropriateness is terrible. You absolutely need both to back up your final audit opinion.
Now look at this hierarchy of reliability, because let's face it, not all evidence is created equal. Up at the absolute highest level, we've got external sources sent directly to you, the auditor. Think of a confirmation letter straight from the client's bank. Management literally can't tamper with it. Then, sitting in the middle, internal documents. These are only reliable if the company's internal controls are actually strong. And right at the bottom, oral inquiry. Basically just asking management a question. That is the weakest form of evidence, hands down. You can never ever base your opinion solely on what someone just tells you.
Okay, I want you to lock this one-line summary firmly into your mind. Evidence equals sufficient plus appropriate, and external direct is the most reliable. That right there is the golden rule for gathering your audit clues. Always prioritize that external, direct evidence over anything generated internally.
Moving on to Section 2. Substantive procedures explained. These are our investigative techniques. All right, so we know what our clues are, and we know which ones are the most valuable. Now we have to figure out how to actively hunt them down using ISA 330. You can think of substantive procedures as your direct, active investigative techniques. You're going to deploy these heavily whenever your assessment of the client's internal control risk is high, or when you're looking at really material, high-value balances. Remember, we aren't testing the company's systems here. We are testing the actual numbers on the page to see if they're materially misstated.
So you've got two main methods of attack here, and you'll want to use a combo of digging into the details and looking at the big picture. Test of detail literally means getting in the weeds, like pulling a specific 10,000-pound sales invoice and physically tracing it to a shipping document. Analytical procedures, on the other hand, mean stepping back. For example, if revenue shot up by 20% this year, but the cost of sales only crept up by 2%, well, that relationship looks pretty strange, right? Analytical procedures flag that anomaly for you so you know exactly where you need to point your tests of detail.
All right, Section 3. Action verbs that score. This is all about communicating like an expert.
Let's pause for a really critical exam strategy moment here. Knowing what to do in the field, that's great, but the examiner cannot read your mind. They can only read your verbs. You have to map the correct active verb to the exact action you are taking. If you're examining a document or an asset, the word is inspect. If you're watching someone else do their job, say warehouse staff counting boxes, you observe. Writing to a third party for a direct response, you confirm. And if you're checking the math on a schedule, you recalculate. These are the exact professional terms the examiner is hunting for.
And please, whatever you do, avoid the classic exam trap of being vague. An auditor doesn't just casually check things or verify a balance. Those words are completely meaningless on an audit paper because they just don't tell the examiner how you did it. Did you check it by looking at it? Did you recalculate it? Did you ask someone? Always use those specific active verbs we just talked about to absolutely guarantee you score your marks.
Section 4. Tackling inventory. Welcome to the physical crime scene under ISA 501.
Let's take our toolkit out into the field, starting with a heavily tested area, the year-end inventory count. The real trick here is breaking down a massive, sometimes chaotic warehouse count into 3 manageable chronological phases. Before the count, you plan. You review management's instructions to make sure they're actually sound. During the count, and remember our verbs here, you observe the staff to ensure they're following those instructions, and you perform your own test counts on a sample.
Then, after the count, you make sure the physical quantities you literally just witnessed are accurately transferred over to the final inventory valuation listing.
Now, embedded right at the end of that inventory process is perhaps the absolute most heavily tested concept, cutoff. Cutoff testing is basically your primary defense to ensure management hasn't accidentally or maybe intentionally blurred the lines between this year's goods and next year's. To do this, you've got to note down the very last goods received note, or GRN, and the last dispatch note of the financial year. Then you trace those documents directly into the accounting system. You're making sure goods that arrived on December 31st are included in this year's inventory, and goods dispatched on January 1st are strictly excluded.
On to Section 5, Testing Receivables. It's time to confirm the paper trail.
So, when a company claims its customers owe them millions of dollars, well, we can't just take their word for it, right? Sending letters to customers, which we call circularization, generates that highly reliable external evidence we talked about earlier. But you have to choose your strategy carefully here. A positive confirmation is aggressive. You use it for large balances where you strictly require a reply to prove the debt actually exists. A negative confirmation is much more passive. You use that for a high volume of small balances where you basically assume silence means they agree with the bill.
But wait, every good investigation hits a dead end at some point, and that requires a contingency plan. So what exactly do you do when a major customer just flat out ignores your positive confirmation letter? You demanded a reply and you got absolute silence. You obviously can't just shrug and assume the balance is correct.
Well, when you're faced with a non-reply, you pivot immediately to these alternative substantive procedures. First, look into the future. Check the bank statements after the year end. Did the customer pay the bill in January? Because if they paid it, the debt obviously existed back in December. If they still haven't paid, you have to dig backward into the internal paperwork. You inspect the original sales invoice and the dispatch note bearing the customer's signature. That proves the goods actually left the building and were accepted by the client.
Let's lock in this final summary to ensure you've got a complete mental checklist for handling any receivable scenario. First, you attempt to confirm the balances directly. If that fails, you execute your alternative procedures. And finally, always review the allowance for doubtful debts. Because hey, just because a customer owes the money doesn't actually mean they can afford to pay it.
So, if evidence is just a clue and substantive procedures are your toolkit, are you ready to uncover the truth behind the numbers? Armed with a solid grasp of ISA 500's evidence hierarchy, the active techniques of ISA 330, and the exact scoring verbs you need, you are totally equipped to handle complex areas like inventory cutoff and receivable circularization. I challenge you to view your next exam or your next financial review not just as a standard compliance test, but as your next big case to crack. Thanks for joining this explainer, and good luck out there in the field.